This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. Sign up between now and the 4th of May to take part in the wallet token airdrop. Further details can be found on my Telegram. Hello everybody, welcome back. We're going to think about JASMY today, and before we do that we're going to have to look at Bitcoin, but before I do all of that we're going to have a look at the Dixie. So the Dixie's reached up into this box of interest here. So this is a resistance zone, a resistance box. We had this in on the live stream, and it does appear that so far it's already reached the top of that, which means that a consolidation could be in the bag at this point. So consolidation taking place here, and it's already started. If you think about what we see, we'll bring it down to a daily. So in fact we'll just take it to a 4-hourly, and this is literally just this last 4-hourly candle that's poked up on here, which is why I thought I'll make this video now, because despite being bearish across the board and having short signals on Bitcoin, being below all major moving averages on the weekly, the daily, and probably not the 4-hourly at this point, but being below almost all areas of significance where you'd like an uptrend to begin, this is like a glimmering ray of light in a dark, stormy season, I suppose. And it does look like there is an opportunity for a rejection at this point, which means consolidation. So let's not get too excited. Thinking about this from what we see on the 4-hourly at least, a rejection could just bring us down to the 50 exponential, maybe the bottom of the Bollinger Band, maybe even the 200 exponential, which is what happened around last time with the 200 simple. So we're not looking for huge rejections here. We are looking for a consolidation that could take place over a period of weeks, 4% maybe at best, we'll see. Now it's hard to get particularly bearish on the dollar because effectively you're fighting the Fed, and the rule is never fight the Fed. But if this does prove to be an area of resistance, which I think it probably is historically, back to pre-pandemic levels and beyond, we do have a toppy vibe. So this could be, I suppose you could call this a triple top, but this is still a very significant level for the Dixie, not seen since 2016. So, consolidation, I would very much hope for that, and if that is the case, then we should see this reflect on the stock market and crypto today. Now, the good thing about crypto is that it trades on a 24/7 basis, and as a result of that, we see it trading up today. Only a little bit, just a tiny piece. It's got a lot of ground to make up, let's face it. We're already at the 10 exponential, which could find itself a nice rejection there. Based on this chart, you'd be looking for it to get rejected on this level here, which is about 39,800. If you can take it a little more, we'll move up to 40 to between 40 and 40,600. So all of these areas are extremely likely to find rejection on. But if we do continue with that rejection on the Dixie, there is a lot of reason why stocks and crypto, especially Bitcoin, but that should take crypto with it, would rally, or at least see some upside. And if that is the case, then between now and the next rate hike, which is in May, we could find ourselves in a decent position for some upside, right? This market is very, very risky at the moment, as all markets are very risky at the moment, and so with that we're going to move on to something relatively high risk but high reward. Now, Jasmine was one of the ones I bought the other day, and the reason I bought it is that I'm suggesting that this is something that you'd want to think about holding on a long-term basis. Short-term is not so much a plausible chart, because it's very young, it's immature, it's wrecked city, and even on the Binance chart we don't even have a 200 exponential. If we go to the Gate.io chart, we do, because it's been there for a lot longer. So we'll just move on to the Gate.io chart, and we will see our 200 exponential all the way up here, basically just 9.1 cent. So let's have a think about what this is doing and what we could be expecting from here, as far as moves up and down, whether you're looking to buy or maybe sell. Like I said, for the record, this is about a long-term position at a reasonable low. Between here and this bottom of this Bollinger Band here, which is 1.7 cent, which is, again, it's a fair drop from where we are at right now. I mean, you wouldn't feel you'd feel quite hard done by if that were to happen and you bought here. If this was something you're looking to benefit from on a short-term trade, that's a 20% drop right now. But if we do look at what we see right here, this is a support. when we see these descending triangles, they're effectively consolidation. So we had a consolidation here. I'll just move this up there. The charts like this are pretty crazy to look at. So this consolidation take place here after this pump. So descending triangle broken out of, that would normally spark some form of accumulation. The accumulation, you could argue, is already beginning, whether you dollar cost average into this area or you wait for the ultimate position to be picked up at, which is the previous support of the triangle. The reason why this would be less risk buying it down here is because we don't have the consolidation, the giant consolidation pushing us down any further. So a retest of this area, which is supported by the Bollinger Band as well as the horizontal, which again is 1.7 cent, is actually a pretty decent thing to think about if you're thinking about holding this for the long term. Now, when we're also talking about, you know, long term, we also have to think about, you know, if anyone has already held this long term, it's been a pretty disgusting hold. Let's face it. This is the Gate.io chart. It shows that its previous peaks all the way up here at $5. $5. Jeez, oh my God, absolute wrecked city. But let's think about it in another way, is that look, we came down to lower than we were right now, and we did a fine old pump up to 32, so it can move. Now, I'm not suggesting that this is the sort of move you should be expecting anytime soon. We are in the midst of an even bigger consolidation, which effectively is still taking place. So you could think about it in terms of that, and we're still well within that. We need to break out of areas of about 3.5, 4 cents for us to be outside of this consolidation pattern, and understanding that, recognizing that, means that we shouldn't really be expecting anything anytime soon. There's lots of coins actually that we look at which are still within these, which if Bitcoin and the market are all still accumulating, and we are going to go on for some more major upside somewhere down the line, you know, maybe, you know, 2, 4, 6, 8, 9, 10, 12 months away, these areas are still quite appealing, but buying within major consolidations like this can test you for all that it's worth. And for a coin that's retraced by the tune of what was it? But as close to 100% as possible, isn't it? Really, 99.8, 99.8, 99.6. Let's face it, you know, you've got to be extremely careful, or ballsy, let's just say. Now, buying these lows, for me, I'm quite happy to do it. I bought these lows, and I will be buying more at these lows as well. I'm not saying it can't come down lower. Coins can always come down lower, but this is now accepted on all major exchanges. I think it's going to be a highly tradable coin somewhere down the line, and buying these lows now will be similar to what it was like buying those Matic lows back in the day. We were buying them between 2 and 1 cent. Effectively, that was the majority of where we would buy from. We would trade between 2 and 4, but every time it came down to 1.2 cent, it was always one of those things where you've got to buy Matic. It's 1.2 cent. It will move, even if it's just a 4x, right? And these things would happen, but the holy grail was always a lot larger. And in hindsight, like, it was right to think like that. You can trade it short term and you can do quite well, and we did that. But the real winners are the ones who hodled it. I hodled the majority of mine to $1. I still got some left, but most of it was sold at $1, because to me that was a tasty 100x. So you can't really justify holding on to the an enormous amount when you've done 100x. They don't come very often, 100x's. But I have a feeling that this one has at least a fighting chance of doing 100x, whether it's from this level or lower, or even lower still. But with those kind of risky tokens that offer potential 100x's, they can take time. Let's face it. I mean, when Matic came onto the market, how long did it take for it to do a 100x? It took about 3 years. So a hodler had to hodl through some pretty horrendous times, basically. Nothing in comparison to this. But I remember people asking. I remember going on one of their AMAs, right, and they were asking the CEO for their money back. If you can imagine that, it dumped from 4 cents to 1.2 cents or something like that overnight. They're asking for their money back. Now, if you can look back at that now and what that really means, if somebody bought the top of Matic of 4 cents or whatever, and they're asking for their money back, they were down significantly. But if you zoom back out again and have a see what happened to Matic in the long run, that was an epic entry price, wasn't it? That's absolutely epic. That's what, 30x. from buying the top previously. So let's face it, I'm not saying that anyone who's bought the top on this is going to be making their money back anytime soon, but what I am saying is that these little pieces of volatility down here potentially you know, are going to just be a drop in the ocean. It might not feel like it, which is why I say don't put in more than you can afford to lose. And for something like this that offers potentially 100x anyway, you don't want to be putting your net worth in there. To be honest, you really don't. You just want to be putting some in there. You know, you put the highest amount into the lowest risk and the smallest amount into the highest risk with the highest returns. So at the moment, it's not really very tradable, but there are certain areas that I'll be certainly considering, and that area would be this flat level of support of around about 1.7 cents. There really is no more to go through by this, so they're all eyes on the Dixie. Watch for the American markets to open within the next hour, and the rest of the week unfold. But if we do get a rejection from the Dixie, it is quite good for everything else, and this would be probably a steep rejection if it were to happen, because it's on from such a considerable high. It might not come collapsing all the way back down into its shadow, although that is possible. It could. It probably won't, but what could happen would be a bit more of a long drawn out consolidation, allowing the for the freedom for everything else to run. It would help, let's just say, allow for that freedom, not necessarily give it the green light to go crazy, but it would stop a lot of this downwards pressure that we're feeling. And again, it's only next month that the next rate hike will begin. That is technically a bearish thing. Move it up 50 basis points. But as we all know, it's a sell the rumour, buy the news event, similar to as it was in March. And I'd expect that to take place all over again. Right, thank you for watching, guys. Hope you have a nice day. Take it easy.